Good morning, everyone. This is Mike Minter, and we're looking back on last week. This is your market in minutes report. And I hope you guys had a wonderful Easter and had a long weekend, hopefully. We got Good Friday off, of course. The markets were closed, so we had a little bit of a short week. But anyway, I hope you guys had a nice time with the family. Let's jump into what did occur last week. And it was actually the strongest first quarter in 5 years. So a very, very nice quarter, strong closeout here. Let's just look at last week in particular, though. So for the most part, everything up, especially small caps up really nicely. But all the major indices other than that were up, except the Nasdaq was just down slightly. So little pullback in tech stocks. If we broaden this out a bit to look at year to date, again, great quarter, and obviously this year to date performance reflects the entire quarter, as we're just the first quarter into the year. So very, very strong across the board. You can see the S&P, which is the broad market, up almost 11%, just a phenomenal quarter, and Nasdaq, of course, up almost 10. So this is indicative of really just this continuing tech stock rally. And of course, the market has broadened out quite a bit, which is nice to see. As you can see here, the small cap also up 5%. So again, we're starting to see a broadening out from just your larger tech stocks, which is always nice. As we look at the rates scenario, not a whole lot of movement going on here. 30 at 4.46, 10-year at 4.33, the 2-year at 4.72, and a 30-year mortgage at 7.38. So there wasn't a big change from the prior week to last week on in terms of rates. So let's get into the story behind what we saw with the numbers. So again, this was the strongest Q1 in 5 years. So phenomenal numbers across the board. So let's get into it. So markets did slip for the first half of the 4-day week. Obviously a short week. So investors took a breather after the prior week's gains. So conflicting economic news on Monday and Tuesday contributed to the slide. So new home sales in February slipped just a bit, 0.3% over the prior month, but increased by 5.9% from the prior year. So that's fantastic. Durable goods orders, everything from washing machines to helicopters, rebounded 1.4% in February, beating expectations and recouping some of January's 6.9% drop. Stocks did rally on Wednesday, including a fresh record close for the Standard & Poor's 500. Great quarter. So upward revision to consumer sentiment on Thursday helped the rally along. So consumer sentiment came in a little bit stronger than initially projected. Always good to see the consumer confidence on the uptick. So along those same lines, we have doubters and believers is our headline here. So we getting a straightforward read on consumers was challenging last week. So you had this consumer board. The conference board reported on Tuesday that the consumer confidence index remained essentially unchanged, as it has for the past 6 months. So showing consumers were generally pessimistic about the future. But on Thursday, the University of Michigan's Consumer Sentiment Survey showed consumer confidence hit a 2.5-year high in March. So kind of combating that pessimism. And it suggested that consumers had gained more confidence that inflation would drop and alleviate some pressure on household finances. So all this is leading, in the right direction here. So, and then as the market was closed on Friday, there was still this PCE report that was released, the Personal Consumption Expenditures Price Index. That's a mouthful, but this is actually the one of the Fed's preferred inflation gauges. So this was good to see. So this was released on Friday, kind of flew under the radar, but because everybody was out. But Powell said the report showed that what we were expecting in terms of inflation numbers. So and even though the numbers showed less of a slowdown than last year, you will not see us overreacting. So this is all positive commentary coming from the Fed. So That report was very good. It was in line with what the Fed expected to see, so should not derail us from their plans to reduce rates later in the year. So that's all good. So what's on deck this week? So we have key economic data, pretty big week. Monday, ISM manufacturing, PMI manufacturing, and construction spending. Tuesday, motor vehicle sales, factory orders, and jolts. Wednesday, we have ADP employment report, petroleum status report, and ISM services index. Thursday, jobless claims, international trade in goods and services, the Fed balance sheet, and natural gas report. And Friday, we have our employment situation, always a big one, and consumer credit. Not much going on in terms of earnings this week. Tuesday, we have Paychex. Wednesday, Levi's. And Thursday, Conagra Brands. So that rounds out the report for this week. Looking back on last week, guys, appreciate your time as always. And if you need anything or want to discuss your finances or investments or anything financial planning related, please give us a shout. We'd love to talk to you. Here's all of our contact information, and hit that subscribe button down below if you haven't already. And we'd love to have you subscribe and get all our videos as they come out. Once again, guys, thanks so much for your time, and I will check in with you next week.